Let's talk about a brand new podcast that I have found that I think you will enjoy. Let's talk about Grant Cardone and perhaps a brand new business model that I think a lot of people will look at. We'll talk about Danielle DiMartino Booth, Bill Gross, and of course, we will talk about the week ahead. But folks, I have a question for you before we get started. As you know, we are putting on an event in Vegas, February 17th and 18th. I just got a bid to allow or enable us to virtually share that. It is a, let's just call it a significant number. So I am curious, if, I haven't done this yet, if I rolled out a virtual option for you to attend the Vegas event, and let's just say it was the same price as general admission at $199, 2 days, 20 hours, all the speakers, all the Q&A. We'll try to work in some chat functions. We'll try to make it beneficial for you. How many of you would sign up for that, right? I need to know, I need to feel like, let's just be honest, I need to sell 100 tickets for the virtual event to feel like this will be worthwhile, given all the extra cameras and microphones and sounds and mixers and all this other stuff that I do not understand. So if you can't make the Vegas event, but you would sign up for, pay for to attend virtually, let me know in the comments below. Again, I need to feel like we can sell 100 tickets-ish to make sure it's worthwhile. So let me know. I still think you want to be there in person, because one of the things you will miss being virtual is the audience, the interactions, the conversations, right? The virtual event will be about the speakers, a couple of camera angles, right? So again, let me know if you want to do that. I don't know. I'm not sure if I'm going to do it yet, so you tell me if it's worthwhile. I will let you know we only have 83 seats left for the physical event. I want to ask you this. I know a lot of you are hoping we'll discount price. We won't, because I think it would be unfair to the 200 plus that have signed up. So if you are planning to attend, do me a favor. I want to sell at least 4 tickets today. I want to see if we can't get that number under 80. So again, trying to sell 4 tickets today. Help me out. There'll be a link below. You can find it on my website, all of that good stuff. All right, let's get into it. The brand new podcast. So I shared with you the All In podcast probably well over a year ago. It's something that I listen to quite regularly. I think you will enjoy the Money Mondays. The Money Mondays is a new channel to me anyways, and I think it is one that my audience will like. They talk about money, they talk about earning it, they talk about investing it, and they talk about giving it away. And I just like the flow and the framework. They have a lot of the big hitters like Gary Vee and others. So again, if you haven't heard of them, check them out, The Money Mondays. An interview that I saw yesterday, again, I saw or listened to yesterday with Grant Cardone. During the interview, Grant Cardone talked about a deal, I think it was in Chicago on Michigan Avenue. These are numbers from memory, so I might be misquoting them. Grant was saying this building once traded at $250 million. He's going to try to pick it up for half off, or $125. That's interesting. But that's not the game-changing business model. If I understood Grant correctly, and there's always a chance I didn't, it looks like what Grant will be trying to do with acquisitions like this is buy them for cash. Buy them for cash. So if you're buying a building like that, again, it's got to have some kind of distress, probably some vacancies. You know, that's the only way you're going to get a discount like that. But if you can raise the capital and pay cash, you are not at the mercy of banks. And you have, in theory, unlimited hold time. So I think that's interesting. I suspect many Wall Street vulture funds, private equity, family offices, I expect the number of cash transactions to go up significantly. Because one of the hardest things to do today is to get loans on poorly run assets. So I don't know, I thought that was pretty interesting, right? What are we seeing a lot of syndicators blow up here recently? It's because they have rate locks and debt resets. But hey, if you buy a building for cash, that all goes away. And you are sitting in the catbird seat, you can just wait for the value to intrinsically come back. I think it's an interesting idea. And I think it's an interesting idea for little folks like you and I. I don't know about you, but I will never buy $125 million anything. Doesn't even hit my radar. But might we be able to do something on a smaller scale? I don't know. I thought it was interesting. I didn't expect that, right? A lot of the last couple of years have been, hey, max leverage, bridge debt, all of that. If the smart money, the big money, is changing their mindset and looking to scoop up Class A assets at depressed prices with cash, call me intrigued. I think that was interesting. And again, I found that on the Money Mondays podcast. I don't know. Shout out to the team putting that on. I like what you're doing there. How about Danielle DiMartino Booth? The one and only Danielle DiMartino Booth, who is wonderful to come on our channel. She talked about the Fed put. She talked about what normal Americans should do. She introduced something that I had not heard of. I've had these discussions, but there's actually an economic rule that I didn't know about. It is called the SAHM rule. I think I heard it spelled correctly as S-A-H-M, SAHM rule. Basically, the SAHM rule says if unemployment ever goes up 0.5% from the bottom in a cycle, the recession is started. Why is that important? On Friday, the Bureau of Economic and Labor Statistics, besides saying we grew less jobs than expected, also, ding, 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 said the unemployment rate went to 3.9%, which of course is 0.5% higher than 3.4%, which we have hit many times as a cycle low. That's interesting. That's interesting, especially when you know that I am calling for a Q1, Q2 recession. Not deep and dark, but negative growth and an actual called recession. It does seem like we are moving that direction. Again, real, why am I drawing a blank on the name? The Atlanta Fed, real GDP or GDP now. Remember last week, after the ISM numbers were horrible, took their expectation for Q4 GDP from 2.3 to 1.4, I think. Significant drop. I think the economy is slowing down. I don't know about you, but that's what it feels like. In addition, in the same interview, Danielle DiMartino Booth is talking about a 4 sigma event in the bond market. You and I have undoubtedly watched the 10-year note. We've talked about it every day this week. The 10-year note went from 5.03 to 4 let's call it 4.54, something like that. It basically dropped Wednesday, Thursday, Friday, 0.5%. The 10-year bond market is not supposed to move that way. If you bought bonds at 5%, you have seen significant appreciation, right? Rates down, price up, value up. It's one of those counter things. So think about that. A 4 sigma event, basically in 3 days. What happened to mortgage rates? Folks, early last week, I called the high for mortgage rates. Mortgage rates went from over 8% down to 7.4 in 3 days. More importantly, remember that spread that we've been talking about? The 300 plus basis point spread? On Friday, it came in at 284. Why is that important? I have shared with you repeatedly that once banks believe the Fed is done, that will start to collapse. The market and banks are starting to believe the Fed is done. Now, don't get it twisted. Don't get it wrong. We're not calling cuts. We're talking stay put for a year. But again, once banks believe we're at the peak, the terminal rate, banks will start collapsing that. We may have seen that on Friday. We'll see follow through this week or not. And then lastly, something else that we have talked about a bunch here that Danielle has also highlighted is don't watch earnings. Watch revenue. Remember, folks, I've shared with you repeatedly that I was a general ledger accountant. I was responsible for quarter-end closes. We could make assumptions that fully pass muster and adjust earnings up or down. But we can't fake revenue. We can't fake revenue. These are important things to remember. So when you see these companies beat earnings, miss revenue, watch. Because again, as someone who is in the mix of making these adjustments on balance sheets and income statements and cash flow statements, we could always do that for a quarter, maybe two, but there was always a price to be paid in subsequent quarters. Watch out. So shout out to Danielle. Also the Psalm rule. I need to check in more into that. I saw that this morning. How about Pantheon Macroeconomics? Specifically, Ian Shepherdson. Do me a favor, folks. Reach out to Ian Shepherdson. I'm going to do it as well. Let him know that we want to interview him on our channel, one rental at a time. We want to get another chief economist on the channel to talk about we, normal Americans, what we should do. The Fed guy, Danielle, many others have been on the channel. Let's try to get Ian on the channel. So let's reach out to him on Twitter and see if he's game to do it. I have already reached out. If you can help, that would be great. But anyways, Pantheon Economics. He's basically calling 2024, to use his word, meh. It's kind of a slog of a year. But what he is talking about is he thinks that unemployment will go up. Not a hard call, but okay. Inflation will go down, but here's the twist. As inflation goes down, he believes that the Fed will cut. Why will the Fed cut? Because the Fed wants to keep real interest rates within a certain band. So let's say real interest rates today are 2%. If inflation falls 1%, you could, in theory, cut the Fed fund rates 1% and maintain your 2% real rates. Solid logic. We have to follow that. Because if the Fed doesn't lower and inflation falls, it's actually more restrictive. Real rates go up. So again, something to watch next year. Most importantly, Ian Shepherdson said this was on CNBC. He expects the Fed to cut 150 basis points next year because the economy is because inflation is coming down. So I ask you, remember the Fed guy's interview. Remember Joseph Wang. Joseph Wang scared me in our discussion because he was essentially painting this picture and then saying the outcome of this might be a crash up in asset value. So again, we need to watch that because again, we need to watch real rates as inflation falls. So again, let's try to get Ian on the channel. How about Bill Gross? Bill Gross, one-time PIMCO founder, leader, bond king, whatever you want to call him. He has called his shot. Another billionaire is calling his shot, just like, what's his name? Bill Ackman. Bill Gross basically called a shot that said the regional banks have hit bottom. In fact, if you go to Bill Gross on Twitter or X, you can actually see the banks that he started buying. I think it's an interesting call. At some part of the cycle, I feel certain regional banks will be a bargain. Is this the point they're a bargain? No idea. I think it's interesting that somebody is calling their shot this early. We shall see. The week ahead, let's talk about what's coming up. Let's talk about economics first and then earnings reports that I'll be watching. On Monday, this is a report that for 20 years, I never looked at. I knew about it, but didn't care. Monday's an important day. Senior Loan Survey, also called the SLOOS Report. What is going on in the lending market? I expect less lending, more declines, just less volume, tighter, much more restrictive. That's where we're going. That's how you get an economy that is meh. So again, loan survey on Monday. Tuesday, consumer credit. Wednesday, watch out, Powell speaks. Actually, a lot of Fed speakers next week. Watch out for that. Thursday, initial jobless claims. And then Friday, if you don't know, it is Veterans Day. So if you're a veteran or you know a veteran, don't forget that Friday is Veterans Day. We also get consumer sentiment on Friday. What earnings am I watching for? Monday, TripAdvisor. Tuesday, Uber, DR Horton, and Datadog. DR Horton will be interesting. What are they doing on volume? Have they slowed down? Have they given up options on land? What is going on with cancellations? All of those. Wednesday will be Disney, Affirm, and Lyft. Thursday, Tapestry, Wynn, and Sony. Near as I can tell, no real reports on Friday as it is Veterans Day. So folks, again, let me know. Let me know in the comments below. If I decide to turn on the virtual option for the speakers at our event February 17th and 18th, would you be game to buy a ticket? Because it is expensive with cameras and microphones and extra photographers and videographers and all of that. I'm right now ballparking the same price as general admission, $199. So let me know in the comments below if you're game to do that. No harm, no foul. If you don't want to, totally fine. I have no problem not spending money. But let me know in the comments below, $199. More importantly, I still think you want to be in the room. I'm hoping we can sell 4 tickets today to get us under 80 remaining general admission. 12 millionaires, you get to ask questions, 100% driven by the audience, 250 other like-minded investors. You want to be in the room, plus a celebration, plus a concert. Why aren't you coming on President's Day weekend so you can travel home Monday? I hope to see you there. Let me know about the virtual event below. I would greatly appreciate it. Bye-bye.